Go through an article on Palantir, not just Alex Karp, even though he is, of course, with his hair and all, the first thing you see. Here we are. Palantir has pumped over Palantir has pumped over 400 million into SPACs and boosted its revenues at the same time. A little bit of an allegation there. It's a throwback to the dot-com era, and Wall Street is worried. It's a fairly well-written article. I think it's interesting. It's behind a paywall, but I have unlocked it for you, so we will go through this together. And I think it should be a good, quick video with some lessons to learn, of course. Palantir is borrowing a lesson from Barney, the Big Purple Dinosaur, and beefing up its business with a dot-com era approach. In 2021, Palantir agreed to pour $406 million into nearly 24 special purpose acquisition company targets, according to investment bank. I mean, Palantir has released this, so it's not like they're hiding this. Among the investments, and then they go on to list them, each offers a chance for Palantir to get in on the ground floor of what could be the next IBM or Tesla. Now that's funny because IBM and Tesla are completely different, and I'm not sure you would say you would want one over the other. They're not the same at all. So I'm not sure that's what Palantir is shooting for with these, but continuing on. And actually, let me make this bigger. But right alongside these investments, Palantir has brought on the companies as customers. The contract size of these deals for those companies has been larger than Palantir's investment in the companies themselves. That's an interesting data point. In two other investments, the contract fees matched up exactly with the size of Palantir's investments. Now that is pretty interesting. The arrangements harken back to the dot-com bubble, when companies relied on the practice of buying software and services from one another to generate more impressive looking growth numbers. Okay. The strategy was referred to as Barney Deals by one company, premised on the same principle that the children's character sings about, I love you, you love me. Two analysts who closely follow Palantir told Fortune that they were worried the business boosting tactic is not creating sustainable revenue. They noted the arrangements were already turbocharging Palantir's sales growth, I'm not sure this is actually true, in a way that could obfuscate how well the core business is really performing. So let's see how they actually substantiate these claims. In some ways, it feels a bit nefarious, Citigroup says. They're going out and making these investments, and then these small scale companies going public through SPAC a lot don't even have revenue, or turning around and using those proceeds to buy Palantir software. Well, that's kind of what you got to do. You have to invest before you can actually make money. So if it's investing in your internal operations before you can actually produce a product or provide a service, that makes sense. I'm not sure what they're getting at here. Palantir has never done things like the rest of corporate America. That is for certain. And we even heard that from Karp. He was like, I'm not going to tell you what anyone else would on these topics. I'm going to share what I believe, and I'm going to support myself and the company. So in some ways, Palantir's push to invest in SPACs, which has largely come in the form of private investments in public equities pipes, seems very much in character. There we go. The company has framed its SPAC investments as a bet on the future, putting money into industries where it sees upside and where there is also potential upside for Palantir's software and services, which, I mean, you can say there's something nefarious going on, and maybe there is with some of it. So sure, there's always a possibility there's something nefarious going on, but it's not a probability. Shyam Sankar told Barron's that the SPACs represented a historic opportunity to invest in our customers. I'm not sure what's historic about it. Maybe it's historic because Palantir has never been in a better financial position to be able to make these investments. Because if you think about it, what was it, 400 million or so, which is about 1% of the company's total market cap. But in terms of cash position, that's probably about 20% of the cash position today. Definitely a pretty large sort of investment when you think about it. And then we scroll back down here. Not all analysts are concerned. I wouldn't expect them to be. It's not like a terribly big, like they're not jeopardizing the company by doing this. This is not a bet the company moment. Following the release of Palantir's latest earnings report, Morningstar raised its price target on the company's stock from 28 to 31. And keep in mind, this is not new. It's not like this earnings was when they started adding companies. It's like Fortune had just realized this, citing an increased conviction in the company's strong growth prospects even while amassing scale. Makes sense. But SPACs can be unpredictable, and therein lies the potential problem. Sure, I can agree to that. Palantir's SPAC activity makes him a little uneasy. This is an RBC Capital Markets analyst. Many of the companies it is invested in are young and in speculative businesses where there's no guarantee they will find success. But they're investing for a reason. At a certain point, you have to ask why. If I want to put it less charitably, is Palantir buying revenue? I've talked about this before. But here's the actual answer. Palantir pointed out that of the $1.11 billion of revenue that the company has brought in during the first 3 quarters of the year, only 2% has come from strategic investment programs. Well, there's the answer. No, they're not buying revenue. Yes, there are people trying to sort of sling that FUD around, but it is not accurate. So far, the SPAC investment partnerships have seemed to pay off for Palantir. The commercial revenues grew by 37% year over year, which in turn helped drive its total revenues 36% higher to $392 million for the 3 months. By comparison, Palantir's commercial revenues in the second quarter grew 28%. However, Citigroup noted that without the help of the revenues from its SPAC investments, the company would only have posted year-over-year commercial revenue growth of 22% in the third quarter compared to 25% in the second quarter. I'm not sure how they're actually getting this, because I thought Palantir's SPAC investments would not have actually generated any revenue, because you recognize the way Palantir recognizes revenue is they have to have generated revenue in the prior 12 months. So maybe the SPACs are actually getting recognized. I'll look into that. But apparently it does make about a 10% difference, which is fairly large. So interesting research here suggesting its commercial business would have actually slowed without the SPAC investments and the SPAC revenues. Very interesting. More bearish is what I'm trying to say, but I don't know if this is completely accurate. Leave a comment if you disagree with sort of this analysis by Fortune. The company's growth rate today is critical for investors to be able to justify the stock's lofty multiple. Palantir's currently trading around $20, a multiple of about 30 times in total revenues over the past 12 months. And there are some price targets of $18 a share, which is a significant gap down. Is it really though? 10 or more % drop, which yeah, that would be. They end the article by saying this definitely is a warning sign for institutional investors. So I ask you, Fortune, thank you. First of all, I'll thank you. Happy Thanksgiving to everyone. Thank you, Fortune, for writing this article, giving some coverage to Palantir. I will ask you, however, why did you not write this when they first started making SPAC investments in the beginning of this year? And why would the institutional investors be buying more Palantir than they ever have? If you realized, actually, PLTR has been at a record level of institutional investors, pretty much increasing ever since the last few months. I don't think institutional investors are worried at all. Palantir is in a perfectly fine position financially. In fact, it's in such a good position financially because it's using equity to pay its, of course, employees with the stock-based compensation. They have no debt. Like, there's zero risk of bankruptcy here, unless they mess up their cash conversion cycle, but I can't imagine that happens with the service. But anyway, I don't see any reason that institutional investors are worried about this. They might not like SPACs, but it's a pretty small amount all considered. Like, it's a large amount, but it's not a very large amount in terms of Palantir's $2+ billion war chest. So they're doing just fine. Institutional investors are not actually worried, but some interesting analysis here. It does sort of ask the question of, is Palantir doing these SPAC investments and getting revenue out of desperation? Now, I don't think that's the case. Or was this a natural progression, or did they, again, speed it up to sort of get some more revenue and boost growth? But interesting points, and I will leave it there for now. I will catch you in the next video.